The stock market has been pretty volatile lately, and understandably so. We are living in risky and confusing times. But unlike the rest of the stock market, one sector has been doing really well: the tire industry. In the last few months, the stocks of JK Tyres, CAT, and MRF have risen 15 to 18%, while that of Apollo Tyres have surged by 23%, hitting their 52-week high on September 6th. Some tire stocks ended lower on September 7th, probably due to profit booking, but not Apollo Tyres. Wondering why? The answer is complicated, just like the stock market. So, this is our attempt to explain to you how multiple factors impact a stock's price by focusing on the tire industry. Welcome back to Revolution Read On, a daily podcast where we break down one story from the world of business and finance. Click on the subscribe button to never miss an update from us. Here's your story for today. The tire industry, like most sectors, was having a really tough time in 2020 and 2021. But now its fortunes have changed, and a major reason: rising vehicle sales. Thanks to the economy opening up and inflation going down, the demand for vehicles is at an all time high right now. Dispatches at India's top 7 vehicle makers have risen by 30.2% in August. The fact that the semiconductor shortages have eased is also allowing companies to now make more vehicles to fulfill the demand. The drop in crude oil prices has also helped. And more vehicles means more tires. Plus, with the EV space booming and more EV companies coming up, more people are betting on the tire industry. Tire companies are also capitalizing on this EV boom and have started making specialized tires for electric vehicles. CAT has launched tires designed specifically for EV buses, which provides 30% higher mileage, while Apollo has launched tires for passenger vehicles as well as two-wheelers. But this isn't the only reason behind the tire industry's surge. You see, a major reason that the tire business had slowed down in the last 2 years was also the high price of rubber. During COVID, rubber suddenly became a very valuable commodity. It was being used to manufacture all the non reusable latex gloves used in hospitals. So, latex prices boomed. And since manufacturing latex is much easier than manufacturing rubber, farmers don't have to make rubber sheets from the liquid rubber they've tapped. Farmers began selling more of latex and less of rubber. This, plus the fact that heavy rains often cause delays in rubber tapping, led to a hike in rubber prices. And this directly raised costs for tire manufacturers. But now, because the demand for latex gloves has died down and recession worries have also caused a lot of other sectors worldwide to slow down, we have plenty of rubber. So, rubber prices are down to a 16-month low of 150 rupees per kg. And you know what else is used to manufacture tires? Steel. Steel prices have also been pretty low lately, down by 3 to 3.5 thousand rupees per ton, thanks to the government of India. Back in May, when commodity prices worldwide were soaring, the government removed the duties on import of raw materials like cooking coal to make steel cheaper. The move aimed to boost infrastructure development in India and has kind of worked. This cheap steel and cheap rubber have worked wonders for the tire industry, drastically reducing their costs at a time when demand is high. And experts believe the sector will continue to boom for quite some time, especially Morgan Stanley. It is expecting tire volumes to grow at a CAGR, that's compound annual growth rate, of 7% in 2021 to 2025 as compared to 3% growth from 2016 to 2021. And Morgan Stanley has really high expectations from Apollo Tyres. It is betting big on the company because around 68% of its business comes from India. A lot of foreign investors are bullish on India right now because demand in our country is seeing growth. In comparison, only 17% of market leader Balkrishna Tyres business comes from India. Also, Apollo is trading at a discount as compared to other tire companies. However, the government is now thinking of removing the taxes it levied on exports of steel. This means more manufacturers may start exporting the metal to get higher prices. This could be a problem for the tire industry. But the recent rise in travel and in e commerce and quick commerce deliveries could very well counteract this risk, at least for companies that are India focused. For tire companies that mainly export their tires, the future could be bleak as global demand is set to decline even further due to recession fears. So, you see, it takes a stock minutes to rise or fall, but so many factors are behind the decision to buy or sell. Let us know if you want similar analysis on stocks of other sectors as well. And with that, we've come to the end of today's story. Thank you for listening to this episode. We'll be back with more tomorrow.